Ladies and gentlemen, welcome back to the channel. Here in today's episode, we're going to be going over all of your Tesla stock news today, as per usual. We're also going to cover the broader market news today because a couple headlines are coming out that sound like they're going to be a positive impact on Monday. And I want to share those with you before they kind of get lost, into Sunday and everyone's focused on earnings and all of the, events happening next week. Next week is going to be a crazy week. But some of these headlines could also move markets. I'm expecting they will. So we'll get into that in this video. We'll look at the option activity, the short position in Tesla, what analysts are saying around Tesla stock, and a couple of articles coming out on Tesla as well. So hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode. If you guys want to come trade with us, what we're doing is, again, going out and finding these AI stocks, robotics companies, energy companies, again, software companies, biopharmas, quantum companies that are really overlooked by Wall Street for one reason or another. Okay, we're investing in the companies before they're hyped up, before they're on parabolic rallies. Okay, hidden gems, if you will. And that is the go-to strategy right now that offers by far the best risk to reward. And that is how we have been able to excel this year. Okay, I've been early to a lot of stocks in my investing journey, but now we're doing it together in a group, finding these opportunities. So that link is down below if you guys would like to join. But with that said, let's get into today's episode. So let's start with your Tesla stock news today because there's not a ton of it, but the news that we do have is kind of important. So New Street Research has raised their Tesla price target to $520 from $465, maintaining a buy rating. And we've seen this following earnings. Basically, most institutions raised price targets or kept them where they were, okay? Which most of them now are in the high 400s, in the, $500 range. Why? Because Tesla had really good earnings. There's no other way to put it. Tesla had really good earnings, basically a blowout in some areas like revenue, like margins, free cash flow, okay? Blowout stories there. A little bit of a miss on operating cash flow and EPS. But it was a really good earnings for Tesla's standards, okay? Now, the conference call also was really good. Elon confirmed 8 to 10 cities are going to get robotaxi by the end of this year. That means we're going to have a lot of news on robotaxi over the next 2 months. Okay. 9 weeks or so, 8 weeks or so till the end of this year. Yeah. That was guidance that we just didn't have before, right? Elon and Tesla, they have not given us robotaxi guidance per cities yet. And judging off of that, I imagine like someone like Dan Ives could be correct in saying that Tesla could be at 30 cities by the end of next year. So robotaxi business is growing a lot. Tesla is paving the way for future expansions now. The Cybercab will start production in Q2. Tesla is building up their manufacturing production capabilities. Okay, likely not just for the Cybercab, but as George Giannis has said as well, because Elon sees a better demand environment. Rates coming down. A lot of people focus on housing and focus on, some of these other metrics, but autos will get a boost from lower rates as well. And Tesla's demand story seems to have stabilized. So you have all of this coming together. Optimus is a little bit of a wild card. Elon didn't sound super clear on whether they would launch Optimus for commercial, deliveries next year, or if that would be a 2027 kind of thing. But the guidance on robotaxi was really good. So when you net all of this out, Tesla had really good earnings. Now, what happened to Tesla's stock? We sold off after earnings, then you rallied up 2.28%, and then on Friday you sold off 3.5%, and you're basically back to where you were before earnings even came out. You're basically unchanged now since September 16th. Why? Because we have this shareholder meeting on November 6th. That's it. Okay. I think Tesla would be, in the 500s right now. If it wasn't for the shareholder meeting on November 6th and the consequential compensation package for Elon Musk, right? That is such a big potential negative or positive catalyst. There's a lot of event risk associated with that. Now, I do think as we get closer to the compensation package vote, you're going to have more firms that come out, maybe Vanguard, BlackRock, big holders of Tesla that say, hey, we're going to vote in favor of Elon's compensation package. And then, as Wall Street deems the odds are rising that Elon's compensation package will be passed, that's my expectation, the stock will start to trend higher. Okay. Maybe we get to a new all-time high again. Maybe we get to about 480, 490, maybe 500 before November 6th. I do think we're going to have a strong market this upcoming week and the next, following weeks. So I wouldn't be surprised if just the broader markets help to drag Tesla higher. Okay. And then once we get that compensation package and Elon's package gets approved, that's when things are really going to take off to the upside. Now, Sawyer Merritt says the Tesla Model Y was Europe's best-selling car in September, returning to the #1 slot for the first time in 9 months. Elon Musk says on X, Tesla back at #1. Stellantis CEO says Tesla could exit the car industry and may not exist in 10 years. Quote, Tesla's stock market value loss will be colossal. Elon Musk comments on this and says he has absolutely no clue. It's funny because Stellantis stock returned a negative 21% loss during Carlos Tavares' tenure from 2021 to 2024. And Sawyer Merritt says, no wonder he's an ex-CEO now. Now, Morgan Stanley's Adam Jonas says Tesla's robotaxi seems to be getting solved faster than nearly anyone thought. Tesla is navigating a dignified exit from the steering wheel having auto business while maintaining a resilient free cash flow profile. Going forward, Tesla is tied to Elon's ability to, quote, steal the fire on autonomy in the face of competition from Mag 7 and beyond. Jesse on X says Tesla's FSD global adoption rate is 12%. In the US, it might exceed 30%. This means that once the service is provided, no matter which country, it has reached a level of completion where about 1/3 of users will immediately adopt it. The moment FSD, which jumped once in Mad Max mode of 14.1.3, becomes unsupervised, while moving from home to work, sleeping/watching Netflix, playing games, the era of complete autonomous driving arrives. Robotaxi safety personnel removed, along with mass production of Cybercab. The era arrives where robotaxis cheaper than Uber flood the roads. The era arrives where Tesla owners become individual entrepreneurs, earning money by using their cars as an unmanned taxi when not using it. The E2E direction presented by Ashcock was correct, and FSD will evolve monthly and yearly, no matter what anyone says. As time passes, we reach versions 15, 16, 17. Even the foolish Gordon Johnson will have no choice but to admit that Tesla's autonomous driving is far safer than human driving. What's even scarier is that this FSD is just the core technology for Optimus movement and labor. Elon Musk and his team now have taken the second step towards liberating humans from labor and achieving sustained abundance. There's romance in Tesla Investments, a company that will one day become #1 in market cap, a legend of mad geniuses led by the world's greatest genius, a group of salvation that will protect the earth and change humanity's lives. I need more Tesla shares. Tesla China has recently been increasing its weight and importance to FSD test drives, and they are listening to questions about their experience after the test drives. Hopefully, this will lead to FSD push and improvements soon. The exemption from the acquisition tax payment for new energy vehicles in China is valid until the end of this year. As a result, demand for Tesla China is expected to be solid in the fourth quarter. China's Yantai Airport Road Tesla Center opened today. And it looks like Tesla Korea is planning to open a store in Incheon. Tesla is currently recruiting advisors for the sales part in Incheon, South Korea. Now, this article from investors.com says Tesla AI plays lead 5 stocks near buy points without this big risk. It says Tesla leads this week's list of stocks to watch near buy points. AI chip giant Broadcom also makes the list, as does oil and gas company FTI, retailer TJX, and cloud-based data analytics firm Snowflake round out the list of names. It says Tesla stock. Tesla swung up and down amid its Q3 report, ultimately declining 1.3% to $433.72, holding support at the 21-day moving average. Tesla stock has a $470.75 handle buy point to a long consolidation stretching back to December. Investors could use Friday's intraday high of $451.68 as an early entry. Tesla stock has climbed more than 7% so far this year, but has more than doubled from its early April low. Tesla is on the IBD leaderboard leaders watch list. Elon Musk's auto company on Wednesday reported worse than expected third quarter earnings, down 31% versus a year earlier. Revenue grew 12% to edge out views. On the earnings call, Musk said that Tesla's robotaxi service will reach 8 to 10 metro areas by year end, down from his prior target of covering half the U.S. population. He expects safety drivers in Austin, Texas to be removed in 2 months, but his forecasts for unsupervised self-driving have been off for nearly a decade. So this article actually suggests that right now could be a good time to get in on Tesla before the next move higher. In option activity on Friday from hedge funds and institutions, you had 249 different trades totaling $151.15 million with a positive order value of 83%. So it was definitely a positive day on Friday. Now, on Friday, you also had 522,000 shares that were covered by hedge funds and institutions. Short interest has fallen quite a bit as well. Short interest was recently at 2.8%. It is estimated today at 2.59%. That looks like about 5 million shares that hedge funds and institutions have recently covered on, probably following earnings that were, again, generally better than expected. EPS missed, operating for cash flow missed, but revenue beat, margins beat, and bottom line, profits, if you will, free cash flow were better than expected as well. So net, I think it was a positive earnings, and I think that's why you're seeing short sellers starting to cover a little bit. This post here from Walter Bloomberg says Musk says that XAI is moving faster than rivals. Elon Musk said on Saturday that his company XAI is advancing more quickly than any other artificial intelligence firm. Quote, XAI is moving faster than any other AI company, he stated, adding, in the end, victory is a function of speed. Musk's remarks came as XAI introduced Mica, a new companion for its Grok platform. Now, in broader market news today, China has rewired its financial system, allowing it to trade globally without relying on the US dollar. But look at this headline. This could be a market mover on Monday. It says the United States and China trade talks were very constructive, per Reuters. This headline here says U.S.-China trade talks in Malaysia deemed constructive. The United States and China held trade talks in Malaysia on Saturday, described by a U.S. Treasury spokesman as, quote, very constructive. The discussions ended for the day and will resume Sunday ahead of a meeting between President Trump and Xi in South Korea next week. So it is very possible that there is some kind of ending to some of the recent trade tensions we've seen between the US and China ahead of that meeting between the presidents of both countries. Okay. And it wouldn't surprise me if Sunday we actually get a readout of some kind of deal, right? That would be very, very positive for markets, and I would expect stocks to do very well on that. Trump was asked if the U.S. plans on striking inside of Venezuela. He says, quote unquote, "we'll see." Now, this was big news last night. I actually shared this to the trading community, but Ontario to pause the Reagan tariffs ad after Trump terminated Canada trade talks per CNBC. So basically what happened, if you don't know, Trump said, yep, we're done communicating with Canada on trade, period. Like trade talks canceled, trade deal canceled, because the Ontario Premier, Doug Ford, started running ads of Ronald Reagan saying that tariffs are bad, that tariffs do not work, blah, blah, blah. They were spending like $100 million on these ads too, by the way. Like it was basically like trying to get Americans to push back on the tariffs, right? That was the idea, like to turn the population against Trump. Trump didn't like that, so he canceled the trade talks with Canada. Well, now Ontario will be pausing the Ronald Reagan tariff ads, and it sounds like maybe that's the concession that Trump wanted to get back to, well, getting a trade deal done with Canada. And Donald Trump says he will be discussing Taiwan during his Asia trip with the Chinese president. And I've been curious about this for a while now, in regards to Trump's White House ballroom. I was wondering, like, who are the people donating for this? Okay, apparently it's Apple, Google, and Meta, of just to name a few, are providing funding for Trump's $300 million White House ballroom. And OpenAI has reportedly been taking steps to develop an AI that generates music, per the information. Now, the United States of America was downgraded to AA- by Scope Ratings. This is not one of the major rating firms, not like Fitch or Standard & Poor's or Moody's. This has to be like a third tier rating agency. I've honestly never heard of them. This came out at 6:58 p.m. yesterday, so futures were still open and it did not move anything. And the U.S. military has accepted a private donation of $130 million to help pay troops during the shutdown, per the New York Times. The CNN Fear and Greed Index to close out Friday ended at 33. This is just to show you, like, sure, indexes are at all-time highs, but there is a lot of volatility still under the surface. We talked about this in some of the prior videos, but if you look at VIX EQ, which is the VIX for equal weight, basically looking at single stock volatility, it is still at like 40. The high recently was 43 and some change, like 44. 66 was the high. The high back in April was 70. If you look at the VIX, okay, the VIX is high. Let's pull it up. The VIX is high back in April was 52. And the VIX recently hit a high of 25. It's back down to 16.37, back down to basically where it was before all of this started, right? You're basically back down to like trend, okay? Back to where you were in July, August, September, as markets were doing well, okay? As the internals of our markets were doing well. AI was doing well, like everything. But look at single stock volatility. It is still very elevated. Like, to get back to where the VIX is essentially today, you'd need to get down to like 31 to 33. So you still need to fall like $7 minimum on the VIX EQ just to get back to a similar level of where the VIX is. Okay, so what does that mean? It means this week, Wall Street is looking at a lot of single stock volatility. That is what has made Wall Street quite nervous recently. It's about the mega caps and their AI spending. For whatever reason, Wall Street's a little nervous that CapEx budgets are going to be cut on AI, and that's simply not the case. Okay, people are still supply constrained on, GPU power, right? We've heard that on CNBC for the last 2 or 3 days. These hyperscalers, they're not going to slow down their AI CapEx spending. They cannot, okay? It is a fight for survival for most of these companies, and it's a fight to hold market share for the rest of them. CoreWeave and Nebius and Applied Digital, they're coming for Microsoft's business. They're coming for Oracle's business. They're coming for Google's business and AWS's business. Okay, AWS, Microsoft, Google, they got to keep building, AI tailored data centers because, yeah, they have a lot of old data centers that are not purposed for AI. So they're continuing to build out. Everyone's continuing to build out, and there's so much demand for, these AI data centers. It's going to be like this for years. Okay, just look at the AWS outage we had, right? You had what was it, Snapchat? As Snapchat adds more AI features, as Snapchat adds more users and more people using their features, they're going to need more AI compute, right? Again, and that was just AWS. Imagine everyone else that is building out these AI features and people that are adopting them more and more, and the kind of compute we're going to need. We're going to be AI training compute or GPU constricted, I should say, for a long time. I think next week we're set up for a massive rally in markets. The equal weight VIX is going to collapse, okay, as earnings show that things are good, as we get back to trade talks with Canada, as China-US trade tensions get resolved, hopefully by Sunday. But most importantly, earnings come in good, and the Fed, we get a rate cut, end of QT. The VIX EQ is going to come down, and that's going to fuel a broader market rally. Again, back to the CNN Fear and Greed Index. You're at 33, not because the S&P or the NASDAQ. Again, S&P, NASDAQ, they're at all-time highs. You're at 33 on the VIX. You're not even to midpoint of fear. You're still on the low side of fear or high side of fear. Because internally in this market, there has been a dispersion where, the high flyers, the momentum stocks have got crushed because that's the area that gets crushed first before big tech. Okay. But I think as the volatility calms down next week, you're going to see the CNN Fear and Greed Index go back into neutral or greed territory, and you're going to see a very broad-based rally. Okay. Now, market momentum is greed. Stock price strength is fear. Stock price breadth, extreme fear. Put and call options, fear. Market volatility is neutral. Safe haven demand, extreme fear. Junk bond demand in extreme fear as well. If you take a look at the AI Investor Sentiment Survey, we did get a new one on Thursday that actually showed bearish investors fell a little bit from 46.1% down to 42.7%. Okay. Neutral investors rose a little bit from 20.3 to 20.5, and bearish investors or bullish investors rose a little bit from 33.7 to 36.9. But you still have more bears than bulls. That's a green flag. This market is going higher. Same with the CNN Fear and Greed Index being in fear still. And another green flag would be the VIX EQ being so high. Again, relative to the VIX being back to where it was in September, but the single stock volatility, very high. That is a sign you want to be buying the shit out of this market. Now, the percent of stocks trading above their 50-day moving average is up a little bit. It was up 3.5% on Friday to 52.4%. So you're back to like a midpoint, which this isn't telling you a whole lot. It's not a super strong market, but it's not a super weak market either. So let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.